Hey guys, good morning everybody. Happy Friday. Today's Friday, November 11th. It is 6:22 right now. Market's going to open in about 8 minutes. So I'm going to go ahead and set up this room real quick and then we can get started shortly. So as we discussed yesterday, today is a US holiday, so the market's probably going to be pretty slow. If the market is too slow, then we're going to treat this session as a mentoring session. So after we do our analysis and you don't see anything, we'll just go over like a couple of the strategies that I've been wanting to show you guys for this week, basically the strategies that I've been using. So we'll see how the market looks in the next few minutes. If it's too slow, we'll just treat it as a mentoring session, but we'll still look for some entries along the way. So feel free to ask any questions throughout the session, guys. It's going to be mostly Q&A and explanation of the new strategies. I mean, they're not really new, they're just variations of stuff we're already applying. So let me get this link sent to you guys here in the premium, and then we can get started. All right, solid. So I've got a few moments for people to make their way into the room. We'll join in. I'm going to go ahead and mark up news. If there's any news today. So there's going to be news here at 7. And that's about it. So let me see if there's any zones around here. I guess we can mark up some zones too. So we'll just do the usual today. Markup zones for some SR rejection entries. And I think that should be it. Adjust this a little bit. There we go. I mean, zones are pretty irrelevant right here. Price is way below. So we got those zones marked up. We got news coming up over here at 7:30, I believe, right? I'm checking on 7 o'clock actually. News right there. See who's here. Morning, Kenny. Morning, Peter. Morning, Maria. All right. So good morning, everybody. Happy Friday. Today's Friday, November 11th. It is 6:25 right now. Market's going to open in about 5 minutes. As I mentioned a while ago, this session, today's a holiday, so happy Veterans Day to you guys as well, to our veterans here in the US, or just any veterans in general. So since today's a holiday, I'm not expecting the market to be very smooth or to like move it very much. It's moving right here pre-market, but I think when the market does open, it's not really going to move too much. Maybe it'll move when the news comes out right here. But other than that, I think it's going to be pretty either choppy or slow. So with that said, if the market doesn't really provide too many entries, we're going to shift this into a mentoring session. So feel free to ask any questions that you guys have. I think for the mentoring session today, we're going to focus mainly on the 2 new strategies that I've introduced to you guys. They're not really new because they're just small variations to things we're already applying. But they'll be useful. So with that said, we'll just see how the market moves for the first couple minutes or so. If it's too slow, then we'll just go back and forth between looking at the market and reviewing the strategy that I was just discussing. There's not going to be any Forex trades today, obviously, because it's Friday. So I'll use these openly, these charts over here, but I'll probably use the maybe this one right here, the 3-minute, just to show you guys the examples and whatnot for the strategies that I'm going to show you guys. Sorry, I just blinked out like that. I was just trying to figure out if I was going to use this or not today, but I'm not going to. So, all right, guys, market is opening in about 3 minutes. Let me go ahead and mark up the overall direction real quick. Overall direction. So sentiment over here is going to be 72% short, I believe. Yeah, 72% short. Fundamentals are currently 100 points in the green. So we have alignment with the fundamentals for today. So long-term direction is aligned. They're both bullish. Let's see over here and check the 4-hour real quick. 4-hour is bullish. So it looks like everything's pretty much corrected back up. It's been bullish for like the past, I don't know, a couple of weeks now. Couple weeks, couple months, give or take. Everything here does look pretty bullish. $15 minutes neutral, but it's bullish, neutral bullish. And the 10-minute is bearish. So I mean, it's a little bit of a mix. It's very short time frames they're a little bearish, but for the most part, pretty bullish overall for the long-term direction. So there goes the long-term direction right there. Market's going to open in about 1 minute, guys, 30 seconds to be exact. When the market opens, we'll see if there's any possibilities for a breakout. For the breakout, I'll probably be looking for a buy here. But, as I mentioned, it is Veterans Day, so I'm not expecting volatility to be very high. Just check the range right now. Let's see, so price has been ranging. Not too bad. I mean, 400 pips pre-market. This drop over here was kind of big, though. So price did drop a little bit, about 1,000 pips. Retraced up about 500 pips. Now it's coming back down. So we'll see. There's a high level momentum entry right here. Looks like. Hit TP too. So there was a high level momentum entry that hit full TP. There's another high level momentum entry right here. This candle's got about like 10 seconds left on it. This might be the breakout if it closes properly. I wasn't really looking to take a sell today, but this might be it. I'm probably not going to take this. Candle's too big. It's way too big. You have to retrace a bit. So you can see here that's way past. It's way past the candle right there. So this here would technically be the breakout. As I mentioned earlier, I'm looking for a buy though, because long-term direction is bullish, but this would technically be the breakout right here. So I'm not going to take it. I'm just going to follow it. You guys got to keep in mind that today is a holiday. So a lot of the movement today is going to be, there's going to be a lot of fake outs today because a lot of the bigger players are not in the market. There's a lot of retail traders and smaller players that are in the market kind of push the price around, but they might not have enough push to really push price in the full direction, right? So price might bounce around here and then it just might consolidate for a bit. That's why it's kind of risky to take these kinds of bigger trades. Scalps might be okay, but taking the bigger trades, something like this is definitely a bit risky because the last thing you want to do is, take the full move, price drops, retraces, comes back down, retraces, etc., and then just stays within the middle for a while. But we're following it here. The reason why this is a breakout right here is because we have a sell momentum. The short-term bias is bearish, and this is a strong red candle. So those are all the requirements for the breakout. identify direction momentum. We have a sell signal here. It's also a strong red candle, and you're supposed to take this for, quick 500 pips. So I'll watch it. Not really playing with it right now though. See, so the fundamentals here are still bullish. Let me refresh this. I mean, they're like right down the middle now. Yeah. So if you guys saw the news with FTX, so Sam Bankman Fried steps down as CEO as his crypto exchange files for bankruptcy. He's trying to save the company, but it's like flopped. Yeah. So yeah, I think Binance is going to buy them out. That's crazy. I used to see their commercials all the time. All right, so see what happened right here, guys. This is exactly what I mentioned, right? So exactly what I said was going to happen. This is why I didn't take the trade, because we're in the middle of a holiday right now. So you're going to have this weird movement where price drops below. It gets really close, or it gets around the area and then it pulls back up. And then I wouldn't be surprised if it comes back down a little bit. And then it just does a full on reversal, right? Because the sellers here don't really have that much power at the moment. A lot of the big players aren't in the market, so they're not pushing price around heavy enough to even get it to 500 pips. 500 pips is not a big move. I mean, it's pretty minimal compared to, the 1,000, 2,000 pip moves that we get in the mornings usually. So I'm still following it here, but I mean, I'm not to say that this won't push far enough to hit TP, but it's not going to be an easy move for it to get down here. It's going to run into some resistance and it's going to bounce around. So we'll see. I mean, I'm following it, but I'm not in the position. I'm not even looking to take any partial moves of it either. Yeah, so it says Dow open slightly, or no, this isn't even right. Is this the right thing? So it's weird. Right here it says stocks open flat Friday as Wall Street tries to build on its biggest one-day rally since 2020. And it says Dow open slightly higher Friday. It just updates randomly. So yeah, they went from stocks are flat to now stocks are slightly higher. And this might be beneficial to the move right here, because typically market will move opposite of it. Let me turn on the sessions real quick. I don't have them on. Yeah, so it's actually at the New York high from yesterday, and then it's also at the Asia low. So you can see where it's having an issue getting past. So yeah, not to discount the move here, but it's doing kind of what we anticipated. I think this will probably just go sideways for a bit before it spikes one way or the other to pretty much screw people over. So it becomes a gamble. It's I don't like trades like this when there's no like clear direction and then it's a news day, it's a holiday, because you kind of get screwed in the middle right here. Like right here, you might be tempted to hop in for a sell because you think price just needs to drop a little bit to reach TP, right? But as soon as you enter, price just spikes up. And then the opposite could happen here. The opposite could be like where you're thinking price is going to go up. As soon as you enter that buy, price spikes down and hits TP and you get stopped out, right? So it's really a gamble here. You're really tossing a coin. It's going to be 50-50 wherever price decides to go. See, can you send me a link over here? Let me see, what can you send me? Let's go Biden. So Biden again is speaking here at 7. It's a lot of stuff going on today. We have Veterans Day today. Biden's going to speak. Thanks, Kenny, for this. So yeah, you could expect, and there you go, full TP. So if you guys took it, great. If you guys didn't, it's all right. I consider this a very risky trade to hop into, so I didn't even take myself. So like I was mentioning before, I don't discount this trade at all. But the problem here too is that if you're spread, or if you got in at a not the best price, then I mean, it literally just came and triggered TP, and then now it's bouncing back up. So hopefully you guys pulled out if you guys are in this position. This is not the day to get greedy and hold on to it, because this can easily like push it a little higher. Seth said Biden speaking at 7 ? Or more like 8:30, more like 10 a.m. So you remember that there was that one day where he was supposed to speak at 7. He didn't even come on at all. that day, or not that I know of. Yeah, you can't trust this time here. Biden's supposed to speak at 7 o'clock, but I don't. Actually, no, I take that back. Because so the thing with this right here is that is at an actual summit. So he might be on time today because other people have shit to do, like they're gonna be on here and they gotta he has to talk and then get off the mic. So he might talk between 7 and 8, but I'm pretty sure he has to show up today. It's not like where he's speaking from the White House where this guy can like take forever to show up or just not even show up at all. He's speaking at the COP27 summit. So he's going to have to be on there if he's on there. If he's not on there, they're just going to skip over him, which I'm sure he's going to be on there. So, all right, guys, we're done with the breakout right here. I'll put the update in the chart for whoever, decided to take it, just so that you guys know. But you guys should pull out. Don't get greedy here because look where price is at. It's right back at opening price, not opening price, but at the entry price. So US30 10-minute breakout, full TP, cover on live. I'm not gonna obviously this trade's not gonna count. I'm seeing you guys the update here because I didn't take the trade. The only trades that count as official trades, guys, are the ones I actually take, right? So that's gonna tell you the difference between official trades, unofficial trades, or trades that I just share. Unofficial trades are trades that I share, but I don't necessarily take, or I tell you that it's official. The only profits that count as official trades are the ones that I've taken with you guys, right? That's the main stuff. So just to clear it up for you guys so that there's no confusion. Scotty over here took the breakout. Nice work, Scotty. He took him right on open. So he took it right here at 630, 636, hopped in, locked in some profit, total profit of 2,080 for the day. So solid work right there, Scotty. Let's see what else we got over here. We got Patricia over here as well. She said, done for today. Market's weird because of holiday. Have a great weekend. So Patricia over here as well. Let this load up over here. Once it loads up, you can see what she locked in for the day. So now it's going through the floor right now. I don't know what else is going on today, causing price to really dump like this. But I would be careful. So I wouldn't chase this here, guys, right? This candle's too big. It's probably have to fill it up a little bit. So we'll probably retrace slightly. And then from here, price will either come back down or it'll just correct right back up. So yeah, there's a really big spike right here on this one candle. See if there's anything going on CNBC. See if there's any updates right here. So last update was crypto prices falling. Stocks open, little change. I mean, it looks like all the markets are kind of dropping right now. Yeah, so Bitcoin dropped more than 6%, Ether dropped more than 7%. Pretty much all of it. The cryptos are getting dumped right there. It says casino operators jump in the pre-market. Casino stocks have high exposure to China, advanced on the news. That country is easing some COVID measures. Okay. So we'll see what happens here. Natasha said, leave Biden alone. Y'all know old people move at their own speed. Yeah, I know exactly. Biden is a different character though, man. Like Biden doesn't speak for all old people because my grandpa's like 70 something. That guy like he moves like he's like 40 or 50, so some old people are different. Biden, that guy's, I don't know. He's on a different level. Let's see. Patricia said, Sean, there's shitty news all around. Big push up yesterday to have an epic drop now. Yeah, no, and I agree with you too, Patricia. This whole week's been kind of off, guys. Just keep in mind that here, I'm gonna put in a list of things. So things that happened this week causing unusual market movement, right? And you guys got to keep this in mind because this has been happening all week. It's not like it's just happening today. So this week we had US elections, right? Also, it's today is a US holiday. Thanks, closed. So, a lot of companies are actually closed today. It's considered a federal holiday. And it's a short trading week. Plus, inflation news released, plus early Fed week, right, guys? So there's a lot of things happening this week causing these weird movements here. Like when there's a lot of things going on behind the scenes, like the US elections, this is a big thing, of course. Today's a holiday, that's a big thing too. It's a short trading week, it's 4-day trading week, technically. Inflation news was released this week as well. And then the Fed was spoke pretty much every day this week. So if you guys put all this stuff together here, let me go on the 10 minutes, probably easier to see. You guys can see that there was a big push right here, right? And this is weird because the inflation news was negative. Inflation news is really bad. So this here was just manipulation to the upside. So this was yesterday on Thursday, price pushed up heavily. Price pushed it from this point up to here, which was 13,900 pips, right? Basically 14,000 pip movement. What do you think is happening right now? Price is correcting back down because this was not supposed to happen. Target price point is down here. This is where price needs to be, right? The thing is, it's not going to just drop right back down. It's going to have some weird movement until it gets back to that point. So, with that said, there's just a lot of reasons not to really trade today. I mean, typically don't trade on Friday anyways. If I see something good, I'll take it, obviously, but I'm not going to force any moves here. So just keep that in mind. Yeah, exactly. Patricia said it's going all the way back down. And I agree with Patricia too. So I don't really have a bias here. The bias here is bullish long-term, but this can shift at any moment. So we do have news coming up over here shortly. There's no high lows. There's no V1s. There's no entries for us to take right now. I mean, there's a high low that came up right here, but not one I would take, obviously. It was on the sessions. So if I see something, possibly we'll think about maybe taking it, but for the most part, I think we're just going to chill out. And we'll turn this session into a mentoring session. So if you guys have any questions, feel free to put your questions in the chat. I'm going to cover the two strategies I promised you guys today, the high-low momentum and the high-low reversal. High-low momentum is like one of the strategies that I've kind of tested a lot, and I think it works very well. High-low reversal, it's a good strategy too, but I haven't really tested it enough. The problem with the high-low reversal is that it's still subjective because it's based off the high lows. Mainly. That's why I don't really like strategies based off the high lows. I like strategies based off the momentum indicator. So you guys see these vertical lines here? See how when they come up, they don't disappear, right? Like once they come up and the candle closes, they don't disappear. So you can base a lot of strategies based off this here because this is absolute. The thing with these high lows is that if it establishes a high right here, the problem with this is that it's not established yet. If the next candle is higher, this is going to disappear and the next candle is going to be a high. So you can't really base strategies off that are very accurate. You can't test it very well. For the high-low momentum, when you see these momentum candles here, as soon as they close, they're done. So you can basically analyze it and you can figure out okay, what can I tie this with? So you have a sell signal here and price drops super heavily, right? So when you see something like that, what do you tie with that to identify, okay, what makes this a good entry? Obviously, you can see the high right here. Once this is established, this is usually established too, right? So you see this right here. This is why I put 2 and 2 together, right? I have this because this is my catalyst. If I see a sell signal here, I want to take this trade, but I want to make sure it's actually going to go down. What I do here next is I look at the high right here, and I'm like, okay, these are 2 requirements that line up together. So we have a high here, price is pushing away from the high. This is basically a supply and demand zone. However, we've identified it before it actually completed, right? Because you don't really know this is a supply zone until price is done moving, right? So when price is down here, you're like, okay, cool, this is a supply zone. But what I do is I get a head start before taking that guess, or before knowing that. I already take a guess here. I'm like, okay, this is probably going to be a supply zone. So if this is a supply zone, price needs to push X amount for me to make enough money for it to push an equal distance away. So that's where I identify this. And this is how I identify this as the breakout too. as a decent breakout, but not one that I would take because of the obvious risk. So like, for example, here I take this for a 1-to-1. You don't have to take it for a 1-to-1. You can take it for a bigger push, but you know, I'm a conservative trader, so I'm fine with a 1-to-1. If I take a 1-to-1 strategy and I have at least like a 70 to 80% win rate, if I take enough trades, I'm going to be in profit at the end of the week, end of the month, end of the year for sure. So with that said, we take the trade right here. This was the breakout I showed you. And there you go, full TP. I mean, what you can do here is if you don't want to exit like for a 1-to-1, what you can do is you can just move your stop loss and profit. So like once price passes TP right there for a 1-to-1, what you can do at this point is you can move your stop loss and profit, you know, down here, because this is where the candle closes, right? You can move your stop loss and profit, and then you can go for a 2-to-1 if you really, really wanted to. I mean, it's really up to you, right? It's your account. You can do whatever you want. So instead of getting out right here for a 1-to-1, you can actually go for a 1-to-2, or if you want to go for a 1-to-3, I mean, you can do that too if you really wanted to. Trade would technically still be running right now if you're going for you know, 1-to-3. So it's really up to you guys how you guys want to play it. The way that I trade and, you know, the way that I feel comfortable is I like trading 1-to-1 because these entries come up enough where you can take enough entries rather than, you know, overextend yourself and then end up leaving money on the table. That's how I see it. Because, you know, I like to gamble, but I like to gamble with an edge. So when the edge is gone, it's fine. I'm waiting for the next one. And that's exactly what I'm going to be showing you guys today. So if there's any questions, feel free to put your questions in the chat. You know, this is a really good strategy. I mean, if you want to just focus on one strategy for like pretty much all assets, I think this would be the one. Because we do have multiple strategies for different assets for different time frames. But you know, if you want one that's pretty much all around that you can use on higher time frames for Forex, and you can use on the higher time frames for US30, and then even on the short time frame in some instances, you can do that. So let's see if there's anything else here. Let's see, we do have news coming up shortly. Natasha said, man, I don't know about trading today. It feels like a setup for people like me. Yeah, no, it really is, Natasha. So if you don't feel comfortable and you don't need to trade, then I would just sit out the market. You know, if you need to trade today, you know, you got to do what you got to do. But if you don't have to trade, I would probably just sit out the day to day. I'm still looking for entries. So don't get me wrong. I'm still looking to see if I could find something on here. But if I don't see anything good, I'm not going to force anything. It's not one of those days where I feel like I can just take trades off instinct or take speculative moves and then feel good about it, right? So just keep that in mind. Yeah, Peter said news in 15 minutes will help push it down. Yeah, I was a sell breakout, Maddie. Yeah, Jonathan said my trade psychology likes 1-to-1. Yeah, and I like 1-to-1 too, Jonathan, because I don't like being in trades for too long anyways. Natasha said, I'll take trades if you and Maddie take trades, LOL. Yeah, no, if I see something, I'll let you guys know, but I just don't see anything right now. So, all right, guys. So as I mentioned, and as I promised, we're going to turn this session into a mentoring session for now. So I'll show you some examples of that strategy that I was just going over earlier, the high-low momentum. So if you guys have questions, you know, drop them in the chat. I'll keep going back between the 1 minute over here to see if there's anything for us to take. Let me check the 10-minute real quick to see if there's anything here too. There's actually a really good entry here that came up at 610. So this is a high-low momentum entry. I was thinking about taking it, but you know, I just was a bit iffy about the market. So if you guys took this right here, I think some of you guys did, because I did talk to a couple of you guys. So it would have been a full TP right there. So pretty solid move. And yes, the high-low reversal strategy as well, Madhu. So, all right, so let's start off with the high-low momentum. So for this strategy here, I don't typically like to apply it on the 1 minute by itself. I'll go on the higher time frames, and then I'll look there, and then if I see something good, then I'll move on to the lower time frames, and I'll just trade within there. So first things first, we're going to go over the high-low momentum strategy. I'll update this chart real quick. All right. See, Jenny said nothing on the closed captions, or do I need to figure out where the button is to turn it on my end? Honestly, I don't know. Jenny, I try to fix it, but I've never used it before. See, I don't know if there's a button that you guys have to use. I personally don't know myself. I don't know if there's directions on there on your end, but I did what was needed on the user end. So yeah, I was actually going to ask you if you could see it, or if you knew how it was working, because I personally don't know. But yeah, there might be a button there somewhere. I've never done it, and I think it's a new feature too. So I'm not sure if there's still bugs or if it's just not really working. Yeah, if you find it, Jenny, let me know. Jenny wanted me to turn on like closed captioning on Zoom. Give me 1 second, guys. Sorry. See if there's anything here that I could find. Yeah, I don't know. I already did everything on here. Yeah, so they said it's in the meeting settings. Yeah, and Jenny, I think it's right here. Let me see. Let me see if I can find it on my side. Okay, I don't think I can get to it on my side, guys, because I'm live right now. Let me check over here real quick. Meeting settings. Yeah, I don't know if I can do it because I'm actually live right now and it's live streaming. Yeah, if anything, I'll have to check this a little later, Jenny. I mean, if you could find it, great, but I can't really go on any of these like settings pages right now. Meetings tab. Yeah, I think Peter over here sent well, it's the same link that she sent, I think, as well. All right, well, I mean, I can't really do too much on this session. So Jenny, I'll try and check it again on the next live session, but I can't really check anything on here right now. If you can find it on your end. Oh, okay, I see. Yeah, Jenny said, yeah, I think you have to enable while off in meeting support, so the host has to enable it, but yeah, I'll message you after the session. Yeah, okay, no problem, guys. So thanks for the help, guys. And we'll get back to the explanation over here for the strategy. So there's still no entries here on the 1 minute, which is fine. Go here on the 10. See, question from Natasha. Natasha's asking, what time frame do you typically look at? So if I'm trading on indices or US30 more specifically, I usually look on the 10 minute. So that's like the main time frame for me. As I mentioned earlier, on the 1 minute, it's a bit more difficult for us to identify entries because there's so many momentum signals. So on the 10 minute here, each candle is a 10-minute candle, right? So it doesn't come up as often. The thing with the strategy too that you also need to understand is that the strategy is a directional type. It's similar to like a variation or a momentum type strategy. So you're looking for direction in the market. Like, so for example, over here, you're not going to take any entries in prices going sideways like this right here, right? Because you're not going to get any direction. You're looking for price to push at least, a certain amount for it to actually get out of this area here. So when price is going sideways, you typically don't want to take entries like this. I mean, especially if it's going really slow like this. And this happened like late in Asia session. So on a Thursday. So this is normal for like Thursday nights. And then again, for today, we have a holiday. So it's not really the best strategy to apply. The market's going sideways, but you don't really know until like you're in the position. Sometimes you'll take a position and it'll actually hit. Sometimes you'll take a position that doesn't really move at all. So for this strategy here on Forex, I typically use the 4 hour and 1 hour. That's why I have two different time frames right here, 4 hour and 1 hour. And then for indices, mainly US30, I haven't really used it on any other assets, but I've seen that it does work pretty well. So for me personally, I use this here on the 10-minute, and I'll just show you this example again right here. We'll go over it step by step. So the first thing you want to do is always identify the momentum signal, right? The momentum signal is a catalyst. So it's exactly what I was discussing earlier. Basically, you want to identify this because this is going to tell you where price is likely to go, right? If you get a sell signal here, it shows you that, okay, price is probably going to come down. So in order for you to confirm that this is actually going to play out, that's going to be step one, identify momentum signal right here, whether it's valid or invalid, doesn't matter. So you have here a sell signal, right? That's step one. Step two, you want to draw a zone at the high low before momentum. So if you're looking for a sell here, you care about the high. You don't care about the low because you're looking for a sell. If you're looking for a buy, then you're looking for the low because obviously, you want price to bounce off it. So with that said, we have a sell signal right here. We look at the high. What you do at this point is you'll draw a zone on it like that right there. And for the third requirement, you want to confirm that the momentum is rejecting off the high-low zone. So you have a high-low zone over here, which is a high, and you can see this momentum is pushing it away from it, right? So this is a rejection off the high-low zone. Once you have that right there, you can enter your short position right here. As soon as the candle closes, you'll place your stop loss at the previous high. Because look, here's the thing, price will do one of two things. If price is right here, it's either going to reverse, break through your high there, and it's going to just keep pushing up higher, right? This is why the strategy is feasible, because you're either going to win or you're going to lose. So at this point here, you're like, okay, if price pushes up here, you're going to lose, right? And if price pushes down here, you're going to win. So that's why I like this 1-1 here, because price has to go one way or the other. It's not going to bounce around and not go anywhere. It's going to either hit your TP or it's going to hit your stop loss. So with that said right here, you basically have, so when you have this momentum signal right here, you already have a 50% chance, right? Because this is going to be your catalyst telling you, okay, is price going to go down or is it going to go opposite? So you already have your 50% chance. You add in this little thing right here, so you can see price pushing away from it. This adds maybe 20% to your probability. So now you have maybe about a 60 to 70% win rate, or a 60 to 70% probability that it's going to go in your direction, because you already have momentum in this direction. I mean, if you want to use the trend meter down here, you can to identify a trend, but I try to keep the strategy as simple as possible, because you don't want to be you don't want to look at the trend meter and be like, okay, it's not red, then I'm not going to take it, right? Because if you have too many requirements, you're just never going to take a trade. You're going to be scared to take every single trade that comes up. So with that said, you have the requirements met here. Step one, identify momentum signal. We have a momentum signal right here. Step two, draw a high low before momentum. Right here, you have the high. Third, confirm momentum is rejecting off the high low zone. So price right here, momentum is pushing away from this high low. And then you enter on the close of the momentum candle, which will be right here. Stop loss at previous high low, and it's for a 1-to-1 risk forward. So with that said, you have the entry right here. Price drops below, drops lower, and hits your full TP right there. The optional step right here is to move your stop loss and profit once price closes in profit. You don't have to do this, but if you want to be careful and you're not really comfortable yet, then you can do this. So for example, right here, let me just go back one candle. So see how this candle right here closed in profit, right? So this closed in profit. If you want to use the optional step here and move your stop loss and profit, like if you're scared and you don't like taking these bigger moves, then at this point, move your stop loss and profit. At that point, you've guaranteed some profit, right? Your stop loss is now like slightly below it, like right there. So price swings up, you made at least some profit. It's guaranteed, you're gonna have no loss. But if price continues down, then you're guaranteed to hit full TP. So you're in a win-win situation here. At this point, you're like, okay, I don't care, right? This is going to help with your trade psychology, because if it pushes up, you still make profit. You probably make a couple bucks here or there. If price comes down, you make a big profit here, right? So at that point, you don't care, because if price comes up, you don't lose. If price comes down, you don't lose either. So you let price go down and full TP right there, blast right through it. So it's just up to you guys, right? Everyone's different. Not everyone's going to have the same trade psychology as the other person. So, if your trade psychology is not there and you don't trust the strategy, which is not going to be many of you guys, because this is new to you guys, you can do this. And then once you keep winning and winning and winning, you're going to start to see a lot of profit. Once you see a lot of profit, you're going to start to trust the strategy. Once you trust the strategy, you're just going to let it run. For me, I don't really care. I just let it run, because it's like, okay, if I lose the trade, then whatever. And I don't care what the TP stop loss is, because I'm not trading based off TP stop loss. I'm trading based off risk percentage, right? So if I'm risking 1% per trade, so here, check this out. I'm trading, so I'm using FTMO 200K account, right? 1% of 200K is 2,000. Right? So for every trade, I'm risking or profiting 2,000. If I win, so this is how much I'm risking, right? That's why I don't really care too much, because what's 2,000? It's not much in the grand scheme of things. So like, for example, here, if you're taking say you take 10 trades this week, right? 10 trades this week, you have 4 losses, and then you have 6 wins, right? You have more wins than losses, which is likely to happen. So 4 losses equals, 2,000 times 4, right? Which you're going to lose, what, 8,000? Negative 8,000. And this is what a lot of people don't get, right? A lot of people don't see the bigger picture. A lot of you guys just don't want to lose trade. You're so scared to lose a trade that, when you lose a trade, you feel like you failed or something, or like you're blowing your account. It's just one loss. Like, you got to be real with yourself. Losses are going to happen. It's part of the game. So here you have 4 losses, which equals to negative 8,000. You have 6 wins, which equals 2,000 times 6, right? And this isn't, this is realistic, but also it's not realistic, because the thing with this is you're probably not going to have that many losses, as long as you're not taking every dumb trade. In the beginning, you might take dumb trades, but eventually you're going to get better and you're not going to take dumb trades. So right here, for the week, you've lost 8,000, but you've made 12,000. So obviously, you do the math. 12,000 minus 8,000, you still made a profit of 4,000 for the day, or for the week, or whatever. Right? And a lot of people don't see this. A lot of people are just worried about taking losses, and they just don't want to lose any trade. But you just got to be real with yourself and understand that losses are going to happen. So total profit for the week, and then if you're on FTMO or something, and this isn't realistic because you're going to be taking other trades. You're probably gonna have more than 10 trades if you're taking all the quality entries that come up. So you have 4,000 profit for the week, which is going to be plus 2% gain, right? And that's just for week 1. So here's the thing with this, for FTMO to pass challenge, you need 10%, right? So if you do 2% one week, and then you do 4% the next week, you're going to be up 6%, right? or 8%. I mean, depending on how much you gain from there, you're gonna be closer and closer to your goal. So if you just stay consistent, I mean, this is accounting for a conservative week, because you would have had a lot of losses, but typically you're not going to have that many losses. You're going to have more wins than losses. And depending on like what lot sizes you're using. So like Maddie over here sent the lot sizes yesterday, right here, right? So if you're doing a 50K account, he has all the lot sizes right here to use. 100K account, all lot sizes right here to use. Sometimes it's more or less, right? So it's going to be around 1%. You don't have to use 1%. If you want to take a riskier approach, you can take 2%. You don't have to do 1%. So instead of using, this lot size, you'll just double it. So it's just really up to your preference, how much you want to risk. If you want to take lesser trades a day and look for more quality entries, then you take a bigger percentage. And the thing with this right here, and if you don't reach it, but still in profit, they will extend you. So this is the thing that a lot of people don't realize too. I feel like a lot of people want to pass their FTMOs like by tomorrow, right? They sign up, they're like, oh, I want to pass by tomorrow. So you guys taking all of like, you take a lot of like dumb risks because you want to reach that 10% within a day because you see other people doing that. That stuff's not sustainable, right? Like for me personally, I don't even make that much myself. I make maybe like 1 or 2% a day max. And then at the end of the week, I'm probably up like maybe 5% because, I'll have losses here and there. So, my payouts aren't the biggest, but once you start having multiple accounts, it adds up. So you have 5% on one account, 5% on the other account, 5% on the other account, you end up having like 20%. And then it lowers your risk as well. So a lot of things, this is one thing that a lot of people don't realize, that FTMO will extend your challenge. Like say if you're on 200K account, you have to make 20K, right? You have to be at 220K by the end of the month. If you're at like 210K, you're up like 5%, they're going to extend you like another month. So at that point, you should be able to make another 5% as long as you're using proper risk. So, like what Maddie said, work smarter, not harder. You just got to be smarter about it when taking these trades here. If you're trading on your personal account, so Jermaine said he'll be taking it on his personal account, which I do as well. I take my Forex trades on my personal account. I only trade US30 on my FTMO because I don't want to mess up the lot sizes and then accidentally blow my account, which has happened before. You guys remember that time when we traded NASDAQ? I think screwed up my account so badly. It like blew all of my MFF accounts in like one trade because the lot sizes were different. So I only trade US30 on my FTMO on any funding account actually. And then I trade all my Forex trades on my personal account. So, yeah, I mean, this is just a subtle breakdown as to like how you can reach your goals, whether you're doing personal account or FTMO. On my personal account, though, I risk 3% because I don't have a daily loss goal. So I risk 3% on there. It's not a huge account. It's a 10,000 personal account. So it's just my personal money. And I do pretty solid on that. I could probably lock in like 1,000 a week on that account, and it's my personal account. So it's not like, and I'm just going to keep growing it. So that's typically what I do on my personal. I risk 3%. FTMO, I risk 1% because of the daily loss goal. And I'm taking multiple trades. So, but I typically end up in profit at the end of the day. If I take enough trades, I'll end up in profit. So, yeah, you can make a chart, Maddie. It's going to be a little more difficult because Forex pairs they are measured differently. So they're not like US30 where they're all the same. Like it's not going to be like this. It's going to be way different. So I don't think you can make a chart you probably find a chart online, but you probably won't be able to make one because it's way different from indices. Like you have to make one for USD, you have to make one for JPY, you have to make one for CHF. It's like each asset is worth differently. So you could probably make one for USD. That'll probably be easier for you, but it's still going to be different. Like your USD JPY is going to be completely different from USD CHF. It's not going to be. That's why I like trading on here, because if I trade on here, like say for example, I want to take a buy right here, right? At this point right here, if I was to take an entry and then say my TP stop loss was like 30 pips, I just type in my risk over here and it puts in my lot size. So for this, I'm taking a 1.45 lot right here. and I just hit the buy button, and it automatically takes it for me. Some Forex.com. So this is why I like this for Forex, because there's so many assets here that I trade, and they're worth differently. So you can't make a chart for this. It's not as easy as US30, because US30 is just one asset. So yeah, no, Deswell said he uses a 1.5%. His goal is 1% a day. He normally hits 2.2 to 5% per day on average. Yeah, and that's smart as well. So once you get confident with your trades, you can increase your risk, and it'll just make things a lot easier for you to make profit, moving forward. So, all right. Other than that, let me scroll up real quick. I just want to make sure I didn't miss any questions. So Jenny's asking, are you drawing the zone using the high-low candle or the SR indicator? I'm drawing it with the high-low. So the SR is not used for this at all, Jenny. The requirement here is to draw the zone at the high-low before momentum. The SR isn't a high-low, so they're totally different. And you want to focus on just the high-low. If it was SR, I'd put SR, but since it's high-low, just focus on the high-low here, because they're going to be completely different. Like, for example, if I turn on the SR right here, yeah, there's no SRs right there at all. All right. SRs down here, but not at the high-low. So SR stands for support and resistance. High-low is just the high-lows. Let's see, PC is asking, so the zone is the length of the previous candle. No, it's not. So it's not the previous candle, because the high-low is not always going to be the previous candle. So for example, right here, there's a momentum. The low's down here. It's like the candle after the previous one. The zone is going to be the length of the previous high-low, but not the previous candle. See, Natasha said, so do you use a smaller lot size with this strategy? So if you look over here, Natasha, you're in the group, right? So it shows, what your lot sizes are here. Your lot size is going to depend on your account size. So depending on what account size you're using, you want to use the lot size associated with it. You want to trade off percentage. So you want to risk about 1 to 2%. And this is what 1% is. So your lot size is based off your account size. So you're not necessarily using smaller lot sizes. You're using proper risk percentage, right? So like I'm on a 200K account. If I'm doing a 100 pip move, I'm taking a 200 lot trade. That's not a small lot size at all, right? If I'm doing a 500 pip move, I'm using a 40 lot, because you want to risk the same amount, but the stop loss is farther. So your lot size is going to depend on your stop loss. If your stop loss is wide, you got to adjust your lot size so that you're still risking about 2,000 per trade. You don't want to go over that, because then you'll go over 1%. Let's see, Madhu said he, in a high-low reversal on the 3-minute and 5-minute in his demo, he made 3K profit, got stopped out for 1,600. Yeah, and that's smart, Madhu. That's really how you should do it, right? Because these strategies here, you'll see that you'll have a lot of entries that come up. And as long as you're risking 1%, it's okay. Throw away 1% here, throw away 1% here. And then you're going to start to have like a winning streak where you'll have like 1, 2, 3, 4, 5 wins, and then you'll be up 5%. So you lost 2%, made 5%, you're up 3%, right? And that's how you would have made like 3K profit on your account as well. So yeah, it's a long-term game. Like with this strategy here, with these 1% entries, or these 1-to-1 risk towards, this is meant to give you profit long-term, right? You're probably not going to have like straight wins every time. You're probably gonna have back and forth. You're gonna have a win, then a loss, then you have 2 wins, and then maybe 2 losses, and then 3 wins and 0 losses. And then eventually you're gonna, it's basically, it's a back and forth game, right? You give, you take. When the market starts giving a lot, you start to take a lot. When the market starts taking a lot, you give a lot, right? But eventually at the end of the week, you're probably going to have way more profit or way more wins than you do have losses. So it's got to be smart about it. Maria's asking, what is an invalid momentum? Invalid momentum is when you have a sell signal, but it has a green candle within it. Vice versa, if you have a red signal right here, but you have a green candle within it, right? So this is an invalid signal, but it doesn't matter. So like, as I mentioned here, identify momentum signal, right? It's just a momentum signal. So the reason why I said valid or invalid is because it can be either type. So it doesn't matter if the candle inside is opposite, it's still going to be directing where momentum is going right here. Yeah, no problem, Maria. Let's see, Deswell said, Sean, I haven't worked on a strategy and trying to make better the win rate. I'm having issues figuring out what my stop loss is. I would like to discuss it with you. Yeah, Deswell, message me after and we'll cover it. Or, if we have time at the end of the session, we can cover it as well. So let me just check this real quick. Some of you guys posted profits. I forgot to look at this. So Kenny over here locked in a total profit of 710 for the day. Nice work, Kenny. Kenny right there, 710. Let's see, Jennifer over here as well. She said, trailed, then re-entered to get 2% trading on demo today. So nice work right here, Jenny. She's trading on her demo today. She took a breakout. She trailed it, got stopped down in profit, 1,380. She entered again to finish the move. Total profit of 2,027 for the day. Nice work, Jennifer. So that's good. I mean, using your instinct to, re-enter the trades, that's pretty solid. Cameron over here as well. Took the breakout, total profit of 3,668 for the day. Nice work, Cameron. And I think that's it for the profits right now. Scotty over here as well. He's currently up 3,614 for the day. Nice work, Scotty. Solid, guys. Maddie said there's a high low coming up over here on the 5 minutes. We'll use this as an example. It's a pretty big move though. It's pretty far out. It's like 1,500 pip move. So we'll follow. I'm probably not going to take it. It's too big of a move right here. Actually, I don't know. Maybe we'll take it for a smaller lot size. What's the lot size for that? It's pretty high. It'll have to close though. So let's see. So I don't think this is going to close here. Buy signal. Had a pending buy signal, but it doesn't look like it's going to close. Yes, no entry there. Maybe off this next one, this will be the entry. We'll come back and take a look. Yeah, Jermaine said retail is pretty might even be ranging. Yeah, that's what I was thinking too. I mean, it looks like price is ranging right here. If you look closely, the 5 minute is actually going back and forth between this area over here. Yeah, Madhu said there is a, oops. So there's a signal in the 3 minute as well. So this right here is actually running on the 3 minute. It's kind of a big move, but yeah, I could probably see it moving up higher. Where it's currently at. Yeah, it's still kind of big for, the 3 minute. But it's going in line with the 5 minute though. So we have one right here that's pending and it's pushing up. So looks like that could actually play out. So here's an example of the high level momentum strategy. Typically I don't use it on the shorter time frames, but it does work. On the shorter time frames, it kind of works a lot well. It works well during New York session, but I wouldn't do it outside New York session. So the difference with this here is that this is this is during the New York session, so you have some volatility here. If you trade this during, Asia session, there's just not enough there to allow it to move enough to really get to where you want it to be. But yeah, I mean, this lined up with this one or with, actually, there's nothing here earlier before that. I'll probably come back here to the 5 and see if this closes. I mean, if this closes, it's going to be in line with the 3-minute over here, of course. So check it out and see where it goes. Let me go back to the 1 minute, see if we're missing anything here. There's no entries here off the 1 minute. So here's the thing that we didn't really notice. Price is actually at the sessions right here, because I didn't have the sessions on the on my chart for the 3-minute and 5-minute over here. It's actually at the sessions, having trouble getting past it, but I can see it breaking past it. If it does break past it, the next target area is going to be the next sessions above it right here. And Maddie said the 10-minute is also lining up as well. Yeah, so I mean, there's a possibility of this to push up higher because the 10-minute is pushing, the 3-minute is pushing, and the 5-minute is pushing. So this is where you get a pretty good confluence here. You can see it started off on the 3, it's following up here on the 5. This candle is going to close in about a minute, and then the 10-minute over here as well. If they all close, it's probably going to keep pushing up higher and higher until it gets to that next level. So yeah, no, I wouldn't doubt it. Pushes up higher and just blasts right through. So this is where I'd make a good confluence. This is where I actually make my entries. So like if I'm trading here on the shorter time frames, if I'm trading US30, I typically will look on the higher time frames, like the 3-minute here. You can see how there's an entry running. I would go down to the 1 minute. I'll look for some buy entries here. If I see here on the 5-minute, I'll do the same thing. There's a 5-minute entry running. I'll go on the 1 minute. I'm like, okay, let me look for some 1 minute entries. The best time frame though is going to be the 10. So if you see something on the 10, then this is likely to probably hit, right? So like if I see something like that on the 10, then I'm like, all right, for sure, I'm going to be looking for possible entry at this point. Because when you have this running on the 10, it's going to be a bigger move. It's going to give you like 1,000 pip range. And then from there, if you see any like V1s or V1 continuations on the 1 minute, that's where I'll start looking for entries at that point. Yeah, I mean, let me go back over some more examples. So there goes, I showed you one example of the high-low momentum. Let me show you another one over here. Let's see if I can find another one over here. So one right here, let's replace. So I showed you a sell, now I'm going to show you a buy. Let's see, Kenny sent me something. Biden starts speaking already. Okay, so Biden is actually speaking right now. So you might want to be careful with if you're taking any trades because it's probably going to dump price right now. Biden being Biden, you know how that goes. All right, yeah, so Biden is speaking right now. That's probably why price kind of flailed off a bit. You can see over here. So price was pushing up, and then as soon as Biden started speaking, price started coming down. 10-minute here doesn't look like it's going to close anymore. I mean, I wouldn't directly base it off Biden, but I do think Biden does have an impact on the market. So like the buy signal here didn't close on the 10. I mean, I personally don't trade on the 3 or the 5 anymore. I usually just trade on the 1 or the 10. So I'll look on the 10. If I have a good entry here, then I'm going to take some 1-minute trades within it. You can see this candle just died down. It was up pretty nice, and then it just inflated completely. So it was up like about 500 pips, and then here it just went all the way down. Now it's like there's no body left. It's all wick. So okay, at this point right now, this is probably best for us to just keep going over the strategies because there's no point in trading when Biden's speaking. I don't even know what this guy's saying. I can see the CC right there, closed captioning. But yeah, he's talking about climate control. Anyways, let's go back to the mentoring session, guys. So if there's any questions right now, guys, let me know. Otherwise, I'll keep going over some more possible entries here. This wouldn't necessarily be a time that I'd like to enter because you can see here price is just going sideways. But I mean, it's just up to you guys, right? If you guys don't care and you guys just want to take every single trade, I can show you that the numbers here will outweigh, the wins will outweigh the losses if you take every single trade. For me, I'm still kind of cautious about which trades I decide to take. But, if you just want to take every single trade, like if you want to do an experiment, you just want to take every single trade. What I recommend you do is open a demo account and take every single entry that you see and just let it run. I'll almost guarantee you that at the end of the week or end of the month or end of the year, however long you want to test it, you're going to be in profit. You just got to see it through. So here's another example for a buy. So identify momentum signal. Right here, we have a buy signal. Draw a zone at the high low before the momentum. Right there, confirm momentum is rejecting off the high low. So you can see how this is pushing away. At this point, you enter your long position right there. Stop loss is placed right there. 400, it's at 410 pips. You put the trade run. And there you go, full TP. Right, this is a one-on-one strategy. So even if you lose trades, you're going to bounce back at some point. If you have one loss, one win, you're back at break even. You have 2 wins, 1 loss, you'll be in profit, which is likely going to happen. So, and these are during Asia sessions. So you can see how market kind of goes sideways for a bit. This entry came later towards like closer to London session. So this might be a better time to take an entry. And then again, here's another entry that happened. Or actually, maybe there's no entry here. Yeah, so this is close, but not close enough. I'm going to show you an example here of an entry that's close, but it doesn't fit the criteria. So we have a momentum signal right here. We have a low right here. This is not rejecting off the zone, right? So you got to skip this because this is not a criteria. The criteria isn't met. So with this, no entry. This over here, this was during the live session yesterday. So this is why I typically don't like to take certain trades during the live or during New York sessions because there's a lot of news going on. I can't remember if there was news going on here yesterday, but let's see if this trade plays out. So this right here is bouncing off it, fits the criteria. Let's see. This is actually a really big move. It's 1,701 pips. So this doesn't actually, or actually, I don't know, does it play out? Oh, so it actually does play out. So I don't know if there was news going on here, but you can see how this trade lasted a long time. This trade went on for a while, but eventually does hit TP. So if you took this trade for 1% and you took this trade over here, because there was 2 trades that played out, right? This one and this one right here, you'd be in profit. So now at this point, you'd be up 2%. Or if you're doubling your percentage, if you're doing 3% risk, you'll be up 6% at this point. So, and this is what I mean, right? So you have to just trust the strategy. Like even for this, I didn't even trust it myself. I was like, I don't know if this is going to hit TP because it's like moving kind of weird at this point. I don't know if there was news at that time. Let me check if there was news yesterday. So there was news at 7 and 7:30. Let me check when this entry came up. So this came up right after news. The news happened right here at 7:30, and this actually came up like 20 minutes after. So this could have been an after effect of the news event. So the news event happened right here. Price kind of pushed up a bit, faked out, and then it came right back up to finally hit its TP. So you would have held on to this trade for about 4 hours. Long trade, right? But eventually it would hit. It's a huge move. But here's the thing: you have to not worry about the move, right? I feel like with a lot of people, if they see it move like 1,000 pips, or like they get scared and they're like, "Oh, I'm not going to take this trade because it's such a big move." That's why you have to base your trade off your lot size and risk percentage, not the actual move. Because if you can be patient, or you don't even have to be patient. Just take the trade and then delete MT4 off your phone, whatever you got to do to not look at it. You'll come back like, at the end of the day or the next day, and you're like, oh, okay, it hit TP. So you'll be in relief. But you won't be checking your phone every couple hours and then trying to pull out early, right? So just, keep that in mind, guys. A lot of these trades, they're set and forget strategy. You just have to let them run. Unless you want to optionally move your stop loss and profit. If that's the case where price moves in profit right here, then at this point you would have moved your stop loss and profit, and when it came down, you still would have made some profit, not the full profit, but you made a little bit. So it's just up to your preference. I mean, if that's the case and you did that, then you would make small profit off this and then make more profit off this right here. So you got to think of trading as a long-term game. You're not going to be like, okay, I'm going to get rich by tomorrow. You can get rich by the end of the month, at the end of the week, end of the year. But you gotta take it in pieces. You can't be thinking you're going to be a millionaire by the next day. Because I feel like that's the mindset a lot of people get going into trading. They expect to hit that jackpot after that first trade. But the game doesn't work like that. So, and I know you guys get that feeling because you see a lot of people take these trades like there's some trades here that are unrealistic. Like you see some people take trades like this where they're like, okay, I'm going to take something like a 10-to-1, right? Whenever people take trades like that, those types of trades hit like maybe once a month, right? Or maybe even like once every couple months. Take trades like this. And then people see that and they think, okay, every trade should be like this. Every trade isn't like this. This happens like maybe once every couple months or like once a year, right? There's only so many times where somebody will actually hit a trade like this. And it doesn't happen very often. Like what happens a lot of the times is they'll enter a trade like this. And then what happens is they get stopped out, right? Price pushes up and then it stops them out. And then the trade actually moves and hits the profit, right? And I'm sure that's happened to you guys a lot where this plays out. But I feel like a lot of people make this, like this is super unrealistic, but people make it seem like it happens every day. It doesn't. That's why I stick with the 1-to-1, because if you're taking like, for example, here, if you're taking a trade like this, then you're going to have losses and wins, but you're going to have more wins and losses, and you're going to be in profit. What you can do as well is if you want to run 2 positions, I've seen some people do this too. You take multiple positions here. You can have one that exits at 1-to-1, or you can take another one that exits at 2-to-1, because sometimes you're going to get a big move. Like for example, for this entry right here, this was a big move because of the inflation news. And you can see price pushes up and then it just spikes up like that because the inflation news came up. But this isn't always going to happen. The opposite could happen. This could actually go past your stop loss and you have some slippage where you have a blown account. So just, keep that in mind. But there's this was an entry right here that I was going to show you guys. There is so the same strategy right here. You have a buy signal. You have a low right here. You identify this as the low. You can see this candle is rejecting off it. You have a 1-on-1 risk toward here. You let the trade go, and obviously it does hit TP, blast right through it. But so this is a good thing too, because if you try to exit the trade right here, price is going to blast through it, and you're probably going to get some slippage. So instead of exiting right here, your exit's probably going to be somewhere above it, like right here, and then you're going to make like a little more than profit than you thought you would have made. So sometimes it's going to work in your favor. Let's see. Yeah, Patrick said a lot of Forex gurus show the 10-to-1 or more trades won't show at all, but won't show all the losses along the way. Yeah, that's the thing, guys. Like when you see a lot of people showing you a lot of these like crazy trades where they have like these like 20-to-1, they don't show you that the trade actually hits stop loss like 20 times before it reaches that point. So like if you're risking a 1%, you guys have to understand that they're like down 10% already before it reaches that, before it hits the move. And then at that point, you're basically at break even, right? So if you would have just done a 1-to-1, you would have been in a better place because you would have been in profit a lot earlier and you would have been more consistent. A 2-to-1 is fine. So like, for example, here, I could do a 2-to-1. Like, for example, if you really wanted to like let this trade run, I even tested it myself. If you want to do a 2-to-1, you can do that too. Even a 3-to-1 could be okay. but anything above like 3-1 is like super unrealistic. You know, whenever I see people do like 10-1s, it just drives me crazy. So I'm like, what the hell? Like that trade will never play out. It'll play out maybe once, and then that'll be like your golden trade for like the whole that you've ever taken. But a lot of times people are doing that like on a demo account too. They're not even doing it on a real account, because I wouldn't risk, you know, that much on a live account unless like it, you know, unless I know for sure it's going to hit. And a lot of those trades are gambles. So just take those types of trades with like a grain of salt, guys. I feel like a lot of people here, like the Forex industry and the trading industry is like full of a lot of scammers. So just keep that in mind. You know, I don't know anyone specifically, but I've seen a lot of things on Instagram that just drive me insane. And it's crazy because people will buy into their stuff. Like people who sell bots, those are like the worst. Because I know those people aren't making any money, but people still buy into them. Like it just drives me crazy. That's why like my goal with trading is to like be as transparent as possible, because last thing I want to do is people think I'm a scammer, which, you know, obviously I trade live, so it's really hard to scam when you're trading live. But yeah, anyways, so we'll keep moving on with this here. Patrick said last momentum short was a high low momentum short on the 1 minute, right? We've been on the 10-minute, Patrick. So everything I've been showing you guys here has been on the 10-minute. So I haven't taken any here on the 1 minute yet. I mean, you could look at the 1 minute. So if you want me to go on the 1 minute, look at entries, I can show you them. The problem with the 1 minute is that your stop loss is going to be really tight sometimes. So for example, here, let me go on the 1 minute. And let me show you real quick. So let me see if I can find one here. I think there's one like right here. This is why you can't really apply this on the 1 minute, because your stop loss is going to be too tight and you're not going to be able to take the trade because you got to cover the spread, right? So let me just measure this real quick and see how far is it from here. So this one's actually fine. You know, this is like London session, so it's actually moving pretty quickly. Let me go to like Asia session, because this is where it becomes impossible. Like if there was no spread, then that'd be fine, but it's a lot of times there's going to be spread. During Asia, it's going to be a really wide spread too. So this is, I mean, the market was moving pretty busy during this day. I just got to find a time where it's like not really moving very much. Okay, like right here, for example. Let me see if I can find. Okay, so this is a perfect example right here. So this right here, we're on the 1 minute. And this isn't always going to be the case. Like if you're on the 1 minute and you see good entries, and you know, go ahead and take them. But this right here, so stop loss is getting, or you know, the swing high is going to be 80 pips away. The spread right now is 170. So it's like impossible for you to even take this trade if you wanted to. If you were to enter this trade, you might get stopped out right away. Although it is a good entry, it's just, you know, your stop loss is too tight. So if you were to take this trade here, like, yeah, it would have hit your GP, but at this point you'd be at negative risk toward. So if you wanted to, you know, enter with a 20-point stop loss, you'd be getting in for like less than half, you know, your profit ratio. So if you find something good on the 1 minute, you know, go ahead and take it. But I would be wary, because a lot of the times the spread gets crazy. And if the spread gets too crazy, like Asia session, like this right here was like right after it, like when Asia session just opened, the spread's like 300 pips, or it's like 300 points. So you're gonna have to cover a pretty big spread before you make any profit on these moves. So, you know, just something to keep in mind. Yeah, Maddie said one other thing. If you want to take a 2-to-1, 3-to-1 ratio, you can move stop in to half TP once it reaches the 1-to-1, then let it run. Yeah, and I agree with you too, Maddie. So I mean, there's different ways to apply the strategy. You know, the safest way that I know and the easiest way to do is just a 1-to-1. That's just the easiest way. Less mistakes, and you'll be able to get in and out of trades pretty quickly. See, Patrick said he used it on some of his trades this morning on the 1 minute. Not so bad so far, but he used a 1030 old TP stop loss. So you can do that as well. That's actually what I've been doing too, Patrick. So during New York session, like I've been telling you guys that I typically will So I'll look for a momentum scalp, but I'm taking it as a pivot scalp entry, right? So for example, like this right here. And this is what Patrick's doing. He's using the old TP stop loss, basically so there's one right here. He's using the old TP stop loss where he's doing 31, which is okay. I think this is fine during New York session because the volatility is so high. You need a wide stop loss just to cover your, just to be careful. So like for an entry like this right here, he would do this. I would actually be using it as a pivot scalp. I mean, it doesn't fit the criteria here, but if, actually there's one right here. So let me just use this as an example. It's not an entry that I took, but I just want to show you what Patrick's doing. So Patrick over here sees a high-low momentum, right? There's an entry right here, but he's not applying it as a normal high-low momentum. He's applying it as a pivot scalp. Realistically, that's what you're doing, right? It might not look like it, but realistically, that's truly what you're doing because let me change the colors here real quick. Turn this on. So this is really just a pivot scalp entry, right? You see a sell momentum below the pivots. So basically what Patrick's doing is he's entering this as a pivot scalp, but he's using the high-low momentum as a confluence, which is perfectly fine. This is actually what I do too. If I see an entry like this, I'm like, okay, for sure, I'm going to take this for 100 pips. And he takes it, blast right to full TP. So this is actually what I've been doing. So if you guys have seen me on the live session the past couple of days, I've been taking these pivot scalps, but I confirm it with a high-low momentum. So I'm looking at this here. I see momentum below the pivots. I'm okay. Is this going to push at least 100 pips? One confluence that I can use to confirm that is I use the high-low momentum right here. So use the high-low momentum right there. With that said, you would take this as the trade, and then you just let it run to full TP. So yeah, I agree with what you're doing, Patrick. That's actually what I've been doing too. But I only do this during, I typically do this during New York session because the volatility is super high. So, all right, other than that, let me go over some more examples here. If there's any questions, guys, feel free to put them in the chat. If you guys are done with the high-low momentum, you want me to go over the high-low reversal, we'll switch over. I think that should be the case here because I think you guys already get it. It's not a difficult strategy. It's actually really easy. So I use this on US30 10-minute. And then for Forex, I use it on the 4-hour and I use it on the 1 hour as well. So I'll show you an example over here of a 4-hour entry. It's the same thing. Nothing here changes. Literally the same thing. Let me put the requirements here real quick. We'll just go over one more and then we'll move on to the next strategy. What was that? Let's go to a random entry right here. So you're looking for the high-low momentum, identify momentum signals. There's a momentum signal right here, draw a zone at the high-low. Got the zone right here. Confirm momentum is rejecting off the zone. You can see here it's pushing away from it. You enter on the close of the candle. There, 215 pips. So the thing with this here, guys, so if you're trading Forex, your bias is going to be a bit different. Typically, if I'm taking this trade right here, what I'm looking at is I'm looking at all of the GBP pairs. So if you guys have my watch list, I have them already organized. So if I have GJ right here, I'm going to look at GA, GC, GCHF, GN, GUSD, and I'm going to see if all of these are going down. If all of these pairs here look like they're going down, like they're bearish, then odds of this hitting are very likely. If I have that lined up, I'm also going to look at the JPY pair. So I'll look at AUD-JPY, CAD-JPY, CHF-JPY, Euro-JPY, NZD-JPY, USD-JPY. If all of these here are also going down, then I'm going to take the trade because I'm like, okay, all these confluences are lining up with it. So that's what I use for Forex here. And that's why a lot of the Forex trades are very accurate because I use the confluence across, all of the similar pairs. If you guys are not familiar with like how this moves here, when price is going down, so for example, if you're looking for price to go down, this right here works as a weighing scale. So when price is going down, that means that the JPY is stronger than the pound, right? When price is going up, then that's the opposite. When price is going up like this means that the pound is stronger than the JPY. So typically what you want to see here is if you want to have a confluence and make sure that this strategy is going to hit, like if this trade's going to hit, you want to make sure that the GBP, the pound is weak, right? That's why you go down here to all the GBP pairs. You look at GA, GC, GCHF, GN, GU, and you want to see that all of these are going down, because if they're all going down, that means that the pound is weak. So if that's weak, this is probably going to go down as well. And the reason why you want to look at JPY is because if price is going down, this means that the JPY, the Japanese yen, is strong, right? So if you look at all the JPY pairs and then the AJ, CJ, EJ, GJ, NJ, UJ, they're all going down, that means that JPY is strong. So if you use that confluence, you're like, okay, this is weak and this is strong. Odds of this hitting, almost 100%. So when I take that trade, I take it with a 3% risk or even a 5% risk, because I'm banking on this to be a jackpot win. Let the trade run, goes down full TP right there. The set and forget strategy. You just let it run. If everything aligns, then okay, perfect. Take the trade, let it run. I won't have to worry about it. Even if it goes in drawdown, you know that this is temporary because price is gonna, come right back down. So that's something that a lot of people don't understand about Forex pairs. That's why Forex moves different, because these pairs are paired against another asset. So when you have this here, you can use your confluence looking at all the GBP pairs and then use your confluence with all the JPY pairs to make sure that this trade's actually going to hit. For US30, it's different. This is a standalone asset. You can't really pair this against anything because it's not pegged against anything. It's just US30. So when price goes down or goes up, that's that one asset. When you're doing this, these are weighed against each other. So this is how you would, this is how I would apply it for Forex pairs. And I apply it on the 4 hour. I also apply it on the 1 hour. Let's see. Maria said, yeah, so I'll look at that shortly, Maria. One question from Du's asking, I know you don't take the high level momentum strategy on the 1 minute usually, but can you look at the last buy signal on US30? Sure. So use this chart over here. So I'll just go over this real quick, Maria, and then I'll go over your question as well. Just going to do this because this is a lot quicker. Go over here real quick. All right, so this one right here, high low momentum. Let's go over to the last buy signal, which is right here. And let's go over the criteria. So we have a buy signal right there. We identify this as the low. You can see prices rejecting off it. So here's one thing that me and Maddie have looked at. I wouldn't necessarily make this a requirement because this isn't always like, it's not always like the case. So for Maddie, he likes to wait for this to actually close outside of the zone. So if it's like within the zone, he usually doesn't take it or he feels risky. For me personally, I don't really care. I'll take it like if it's there because this is a numbers game, right? This is a game of probability. So like if you take as many trades as possible, odds are you're gonna make some profit off it, right? So if I took this here and I also took this one up here, I'd have 2 wins already, right? There's no trade here. This one right here would have been a loss. You have 1 loss, 1 win, and then you have another trade right here. So you'd be at break even. At this point, you have another one here. It's just a numbers game. And measure this right here. The main thing I'd be focused on here, Madhu, is that whether the stop loss is wide enough, which obviously it is right here. It's 390 pips, right? So this is perfectly fine. This fits criteria. Everything lines up. For here, you have pretty much all the requirements met. Buy signal. It's the zones right here. Price is pushing out of the zone. You enter there for a 1-to-1. Take this for a 1 to 3% risk. Let the trade run. And you can see right there, full TP. So I would consider this an okay move. The only thing that would worry me is if the stop loss is too tight. So for example, right here, there's another one. Let me see how far the stop loss was here. I think the stop loss should have been okay here as well. Yeah, it's actually not too bad. It's around like 320 pips. So like typically if it's like at least 300 pips, I think that's fine. Because the thing is, you're risking 1%, so it doesn't really matter, right? Like if you're going to win the trade or lose the trade, it's fine. The only time that you don't want to lose the trade is if the stop loss is too tight. Because what happens sometimes is if the stop loss is too tight, you get screwed. Because what happens is price comes up, it like barely triggers your stop loss. As soon as it like spikes out, it comes right back down and hit your TP, right? So that's like the worst feeling. And the thing is, you don't want to take this at a negative risk toward. So, you know, for me personally, I would just, if it lines up like this, then I think it's okay to take for me myself. But you don't typically get these types of entries like this because the movements are a little weird sometimes. So we have another one here that's pending, but it's not going to hit because the zone's right here and sell signal's way down here. So hopefully that helps, Madhu. All right, so question from Maria. She's asking, I would like you to explain the 10-minute daily reversal. So there's no 10-minute daily reversal, Maria, but I think what you're referring to is what we looked at yesterday, right? It's not necessarily a reversal. It's more so like a counter trend trade. So I think I used different verbiage for that type of entry. Was it yesterday? Let me check real quick. So it was supposed to be a counter trend trade. That was really what it was supposed to be called. Yeah, it was this one right here, right? Because we got a sell signal, but then you just ended up taking it for a buy, right? I mean, it wouldn't really matter because you would have taken this one right here and this one still would have been the entry because that one was invalid. But I think this came too late. This was already too late, actually. It was already like, but this is the one that you're talking about from yesterday, right? So for Maria, I think she's talking about this one. This is the one that I posted yesterday. So right here, we got a sell signal. But the thing with this entry is that the bias yesterday was all bullish. So if you remember yesterday, this was like, I mean, I don't know the exact numbers, but it was like, sentiment was like 70% short. I think fundamentals were up like 200 points. This is bullish. This is bullish. This is bullish. This is bullish. Everything was bullish, right? So this isn't necessarily called a reversal. It's called just counter trend trading. Because like, for example, here, or you're not counter trend trading, but you're trading the direction of the trend. So right here, you have a sell signal, but you know that everything's bullish. So like, there's no point in you taking the sell here. What you do end up taking is the opposite. So instead of taking the sell here, you end up taking the buy. And then you just go in the direction of the trade. So does that make sense, Maria? Because it's really simple. It's not really that difficult. I just want to make sure that it makes sense to you. Like the reason why you would take the opposite trade here. Because the thing is, you do get a sell signal here. But the thing is, everything was super bullish yesterday, right? Sentiment was 70% short. Yeah, sure. I mean, if you find it, Maria, I could look for it myself too here. I'm pretty sure it was from yesterday, but yeah, I could be wrong. Maybe it was the day before. Okay, so it was this one right here, the daily reversal, right? This was on the 9th. So it was the day before. I think it was the same type of entry though. But yeah, the market was still bullish. It was bullish pretty much all this week. Or I don't know if it was it bullish yesterday? I can't remember. Or I want to say I can't remember what it was on. I think it's like marked up here. Decided to the opposite because overall long-term bias is bullish. Yeah, so this is the one right here. I mean, I can't remember because so on that date I wasn't speaking that day. Let's see what this was. Yeah, it was right here on the, I just can't remember what time did the trade come up. I think it was, yeah, it was this one right here. So it was on open. So this is the one that we were talking about. I mean, it's the same thing that I just went over. It's literally exactly the same thing. So there's a sell entry here for the daily, right? But everything was very bullish. So I even marked it up right there. I said full TP on the 10-minute daily we discussed. Reason we decided to do the opposite was because overall long-term bias is bullish. So you had everything here that was indicating that price was going to go up. Retail sentiment was super on the other side. Fundamentals were up like 200 or 400 points. Everything was bullish here. So the reason why you wouldn't take the sell here is because why would you take the sell when everything's bullish, right, Maria? You understand what I'm saying? So with this, we have this right here, but you would take the long position. You just take the opposite. So this is a counter trend entry, right? I mean, that's literally what it is. It's the same thing we apply in the 3-minute, 3-minute, 5-minute, and 10-minute in some instances, where you do have a sell signal here, but everything is so strong for a buy. I think this was up like 400 points or something, and this was like 70, like 76 or something, 74. It was a really high sentiment. So it's the same analysis as I went over earlier. We had a sell signal here for the daily, and then at this point you would have ended up taking the opposite. So instead of taking the sell here, I mean, this is like standing in front of a moving train, right? You wouldn't stand in front of a moving train when price, or like if the train's going left and you see someone trying to step in front of the train because they think that they're going to stop the train's probably not going to stop because the momentum's so strong. So like, this is what we mean by that. Like, people are trying to stop the train, but it's like it's a speeding train. So like, as soon as this happens, price goes straight up and then it blasts right through, right? It's you trying to go against the majority, or like not really the majority, but like where the trend is going. So does that make sense, Maria? Because it's a pretty simple concept. It's just like, you know, there might be a confusion there because you're wondering like, why are we doing the opposite? Main reason we're doing the opposite is because everything here was very bullish. Yeah, no problem. So it's the same thing that we apply. It's the same thing as that we apply sometimes on the 3-minute and 10-minute. If you have everything here that's very bullish, right? There's no reason you would go against the bias. This right here was temporary. What typically happens on market open is you'll get a fake out. Like, for example, everything here is super bullish, but then on open right here, you get this big red candle because you just have this like fake out right here, and it tries to lure people into these sells. As soon as this comes up, price just skyrockets right up, and it does where it's supposed to go. So we already anticipated it to be bullish, but for this right here, you know, it would have trapped some people here for some sells, and then it would have just went up and did the opposite. The only time you do this is if everything here is very bullish. So if the 4-hour, 1-hour, 30-minute, 15-minute, 10-minute is all bullish, so short-term bias right here is bullish, and then you have long-term bias that's also very bullish, that's when you take this type of trade. But if you have this where like one of them is bearish, two of them is bearish, and then say this is like maybe 100 points and this is maybe like 60%, then you're not going to take a trade because it's not a very strong direction. But when it's very strong, then that's when you can take the risk and do the opposite. Because for the breakout here or for the daily, it's going to do one thing or the other, right? It's either going to go up or it's either going to go down. And I would personally go where the majority are going. So not majority of people, because majority of people here are 70% short, but I would do the opposite of what they're doing. So, all right, guys, I think that's it with that strategy there. I think the last strategy we need to cover is going to be the momentum or the high-low reversal. So for this one right here, it's not been tested enough by myself or by Maddie. So if you guys want to test this, you guys can feel free. It's a pattern that I started to notice when I was going through the high-low momentum. But this one here is pretty good too. The only problem with this here is that it's not a set in stone strategy. It's not like the high-low momentum where you get a momentum signal here and then it doesn't disappear, right? The high-low reversal is based off just the high lows. The problem with that is that the high lows tend to repaint, right? And that's a really big issue here. So let me see if I could find one over here, and I'm just going to show you one quick example of like how it works, because I do find it to be a good strategy. It's just that when it doesn't continue in that direction, you might have to, so the fix for me is that I think what we might have to add to it would be a momentum signal, because the momentum signal is going to dictate where momentum is going. So let me just show you real quick. So let me just replay this right here. We're using this without the momentum signal, right? That might be another requirement that I have to add, but I haven't really tested it because I've been stuck on the high-low momentum. So here's the high-low reversal strategy, guys. For sells here, you're looking for a low with a red candle. You're looking for a high with a red candle. So for example, over here, you have this low and it's a red candle, right? And then you have this high over here, and this is also a red candle, right? What this shows you is that this is a reversal. So you have a low here with the red, and it pushes up here, and you have a high here with the red. This is indicating that, okay, price is retraced up, but the sells are in control, because you have the low over here that kind of pushed price down. It retraced up slightly, but when it reached the high, it gave you a big red candle. So what this said, you're like, okay, price is probably going to keep dropping from this point, right? Or it's going to fill this gap at the very least. Gap by gap, I mean the retracement. So you see how we have a low here and then price retraces up. It's going to have to fill this candle right here, right? To continue dropping. So once you have that set up right there, this is pretty much it. You look for a low with the red, high with the red. You have that set up. You anticipate this reversal to happen right here. And you set your stop loss at the high. You have your TP equal distance away, let the trade run, and there you go, full TP. So you literally predicted it's like a gap and fill. It's basically a retracement and refill strategy. So you have a low here, you see price retrace, and then you know it's going to fill the retracement. And that's exactly how you would apply the strategy here. Let me look for another example here. I'm going to try to look for a buy now. Same thing, just opposite strategy. So instead of looking for a low and a high with red, you're looking for a high and a low with the red. Okay, right here. Perfect. So again, same thing. Now we're looking for the opposite. For buys, you're looking for a high with the red. So you have a high right here. Or sorry, a high with the green candle. You're looking for a buy now. So you have a high here with a green candle, right? So price pushes up. And then now you're looking for a low with a green candle. So you have the high right there. You have the low over here with the green candle, right? This is a high. Price is retraced. Now that you have this right here, you're anticipating price to fill this gap right here, right? Not really a gap, but this retracement. So price push down. Now you're looking for it to at least push up and fill maybe at least this candle right here. If it doesn't fill the entire retracement, you can see how there's a big candle right here. So you can see how there's a big candle right here. You're expecting it to at least push up to fill that candle, right? So right here is 200 pips. You have that set up. You can see right here where the body is. Let the trade run. Pushes up. It fills the candle. Pushes up a little higher. Blasts right through it. So the reason why you're looking at this here is because people who chase this, like the logic behind this is that you see a lot of people chase this right here. Like you see how this is dropping down. People are chasing the sell. And what do you think people are doing at this point? The people who are late, they enter this for a sell right here, right? And where do they place their stop loss? At the high of that candle, right? So what you're doing is you're looking for the stop loss hunt. You're looking for the opposite. People are looking to chase sells right here, and then you're looking to catch their stop loss. So their stop loss is right here. And what you're doing is you're being devil's advocate here. You're basically looking at this and you're like, okay, I want to stop these people out. What are the market makers going to do to stop them out? They got to push price right here, right? So price pushes up and you're actually taking the opposite position. So people who are chasing the sell here, because what happens is people see a drop here and they're like, okay, they start to bandwagon when price gets at the very low. This is what happens with most people. It's probably happened to you too. You see price dropping and you're like, oh crap, I missed the whole move. And you start to get FOMO and then you just want to enter whenever you see a big candle, so you see a big drop right here, you're like, okay, this is like my time to enter. As soon as you enter the trade right there, you get stopped out, right? So using the strategy here, you're not getting stopped out anymore because you're actually doing the stopping out. You're stopping them out because they're getting stopped out and you're catching volatility in that direction. So that's how this strategy works. I mean, I try to use logic with all of my entries, all my strategies. I try to have explanation and actual analysis behind it, because from my years of training or trading, like I got stopped out a lot of times. And the thing that pissed me off the most is like, I was like, how do people always figure out what my stop losses are? And I figured it out. It's like, you look at this pattern here and you're like, okay, whenever you see price push like this, price doesn't keep pushing long enough. It typically will push up and then, you get in at the wrong candle. And I'm sure this has happened to a lot of you guys, because this has happened to me like countless times when I was learning how to trade. Like, for example, here, you don't have any indicators. And this always happens, right? You see how price is pushing up right here? Like, for example, if you didn't have any of my indicators, this is the whole reason I created my own indicators, because I don't want to be doing what everybody else is doing. I want to do the opposite of them. So, you see something like this and you're like, okay, cool. Price is trending up super heavy, right? And you're like, oh, this has to keep going up. You see this big candle right here. As soon as you enter the trade, you're like, all right, cool, I'm going to end this trade. And then as soon as you enter the trade, your trade goes complete opposite. And you're like, man, what the hell? Like, what did I do wrong, right? The thing is, you weren't thinking opposite of everybody else. You're kind of thinking as everybody else, because everyone sees this going up. They're like, okay, this has to keep going. But unfortunately, it doesn't keep going. It does the opposite. So for me here, that's why I've created these indicators, because now that I have this marked up like this, I turn on my indicators and I'm like, okay, price has been pushing up for a bit. Have my high lows here. And if you turn everything on, you kind of like start to figure out when price is going to turn on you. The reason why this over here, and you got to take a bigger analysis though. Like, what time is this right here? This is Asia session. I wouldn't be trading during this time, but this is usually, so let me see, what time is this? 16:30. The way that I've learned is that trades typically run in sessions. So like, for example, here we trade from like 6:30 to 8, right? So you trade from 6:30 to 8, and price moves directional. And I mentioned, I don't trade from like 8 to 10 usually, because market moves kind of weird. And then we get that big push from like 10 to 12. And you can see how price moves in patterns, right? It's directional. It's directional. Sideways. Right here between 12 and Asia session open. Reverses a little bit. And then during Asia session, it usually has its sort of direction. And then as you get closer to the end of Asia session, so you can see how price goes up right here. As you get closer to the end of Asia session, it starts to level out. And then from here, it starts to move again in the opposite direction. That's why I only trade during certain sessions. Because, like, for example, here, I already know price is going to go at least one way. From 8 to 10, I don't trade because I know price is going to go sideways. I'll come back at 11. I know price will move directional again. And then from Asia up until, it does the same thing. It has one direction initially, and then it reverses as it gets closer to London session. Right? So you guys will see the pattern there. That's why we usually trade here from 6:30 to 8, it's directional, 8 to 10 sideways, 10 to 12 directional, 12 to close, retracement or reversal, and then Asia session direction, and then opposite midway as well. So it does move, it moves in a pattern generally for the most part. So, all right, guys, it's 8 o'clock. If you guys have any questions, feel free to put your questions in the chat. I think we've covered basically what we wanted to cover for today. Unfortunately, we didn't have any entries today, but just as a reminder, today was a holiday, so it's not really a good day to trade to begin with. Also, it's been kind of a weird week. We had elections this week. So here's the things that happened this week that caused unusual market movement. US elections, today was a holiday, banks were closed. It was a short trading week. Inflation news was released this week, and we had an early Fed week where the Fed was speaking pretty much every day this week. Typically they go like the third week of the month, but this week they did it on the second week. So it's just a bit of a iffy day. So if you guys have any questions, feel free to put them in the chat. You know, I'm willing to stay on here for as long as you guys want, if you guys want more examples, but if not, we're just going to wrap it up. It's Friday, so it's not a good day to really take any risky trades or hop in anything that's unnecessary. It's probably best to just save it for next week when you're fresh. So, all right, guys, I think that's about it. I don't think there's anything else for us to cover here. Let me check the calendar real quick. Yeah, there's nothing else for today. We have the German Bubba President Nagel speaking at 9:30, but that is not going to affect us at all. I don't think there's anything here for CNBC. Yeah, there's not really much updates because a lot of people are just calling it a week. It's early week for everybody. Yeah, I think that's it. So, all right, guys, unless you guys have any questions, you know, feel free to message me on Telegram. I'll probably be on for a little longer on Telegram, just finishing some back office work. But if you guys want to email me, you know, always feel free to email me at sean@kodikaitrades.com. I'll get back to you, you know, as soon as I can. But other than that, I think that's about it. So yeah, no problem, Peter. And again, you know, just a reminder, Maddie's going to start mentoring. I don't know if he's like set up a schedule yet, but I know like 3 or 4 people have already set up sessions with him next week. He's doing private one-on-one mentoring sessions. I know some of you guys don't like doing mentoring sessions with me because you feel like you don't want to be bugging me, or you just don't feel comfortable with me criticizing or, you know, giving you directions directly. So if you guys want to get help from Maddie, I basically mentored Maddie from his first day trading till today. He's been trading with me for about a year, and he's pretty much mastered a lot of the strategies because that's all he's been doing. So other than that, guys, we'll wrap this up. We'll have another mentoring session on Monday. I'm going to be working on a revamp of the course with the new strategy videos, and I'll keep calling signals. So we're going to bring back signals. I think next week I'll start calling official signals. So, you know, be on the lookout for that. I'm going to be sending out more quality entries, not just any entries, but quality entries that I'm going to be taking on my own account. So yeah, guys, other than that, a lot of big things coming, but we will see you then.